Today is Monday, May 17th, and this is the ADM Investor Services Weekly Market Kickoff. Please note that the views and opinions expressed here today are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. Today's guests are Alan Bush, ADM Investor Services Senior Financial Economist, and Scott Harms, Senior Ag Risk Specialist at Archer Financial Services. Scott, let's start with the grain markets this morning. The corn and soybean markets have been on quite a roll, especially over the last 90 days. New crop corn and bean prices have both tumbled nearly $1 off their highs, however. Is this ride over?
Well, it's been quite a ride for sure. I would not say that the ride is over. This kind of unprecedented move higher needed a correction. We didn't get very many corrections within that price move over the last, since the acreage report at the end of March, we had 26 trading days, and or 27 trading days, and 6 of those we closed lower. Every other day we closed higher, and we rallied close to $2 off of the lows in the corn during that time frame. So the market's overdue for a pullback. We had a lot of injection of outside money, and certainly the fundamental drivers of South American weather was a key as well. So I'm not saying the rally wasn't unjustified, but the strength and the depth of the rally was, I think, beyond most people's expectations. But now I think we're moving into a time frame where we're probably going to get a little back and forth, a little more two-sided trading action as we watch weather moving forward. But no, I would not say that the ride is over. It's going to be a very, very volatile summer, watching weather forecasts, given the tightness of stocks, not only in the U.S., but globally. But for now, it looks like we've taken a little bit of a pause.
Scott, I understand that one of the other key fundamentals that's playing out right now is the number of planted acres. What's your take on the expected increase in acres?
Yeah, that debate has been heating up the last couple of weeks or so. With prices moving as high as they were, as they have, you're certainly going to expect expansion of acres moving forward. There was a private analyst out on Friday that they felt that there's going to be a 5 million acre increase, 5 to 6 million acre increase in corn acres. That's probably a little on the rich side. Historically, when you get prices, you get good prices in the spring, you see a 2 to 2.5 million acre increase in corn acres. This is not a typical year. It certainly is. If there's ever a year where you're going to get a bigger expansion, this would be that year, given the price, the price movement we've seen. But I think overall, I would expect a close to 5 million acre increase between corn and soybeans. The competition against corn and soybeans in other commodities, milo and cotton and in other areas, and wheat prices as high as they are, is going to keep that competition pretty high. So I think it's going to be difficult for us to see that increase that was projected on Friday. But no question, we'll see an increase in acres given what prices have done over the last 45 days or so.
Scott, I'm going to come back to you. Alan, question for you. Let's talk about the greenback here. The U.S. dollar was fairly quiet last week with a steady trade despite bullish and larger than expected consumer and producer price indexes. What's the significance of this?
Well, even though the dollar was supposedly supposed to rally on that type of news, it did not. I mean, some of those numbers were very much out of what was expected, including the consumer price index. And yet for the dollar index to close basically steady on the week, that in itself has to be viewed as a sign of weakness. We're also seeing some follow-through pressure today. So to ignore bullish news, I think, is an indication of lower prices to come for the dollar index.
Scott, just going back, I want to look at a little bit at the export and demand situation. China has been an aggressive buyer of corn, including another 67 million bushels this morning. What can you say about this recent Chinese demand?
Well, the demand has been very aggressive from China, but we have to keep in mind these are new crop sales. They're not the current marketing year, but normally China, I think a year ago they had bought 819,000 metric tons. Now they're close to 6.8 million metric tons purchased on the books at this point. I think it says a lot about the depletion of Chinese stocks, perhaps over during this COVID period. And also we're seeing an expansion in their hog herd. Their hog herd now is announced recently that their hog herd is running 98% of what 2017 numbers were. And I would certainly would expect that the hog expansion in China could increase over 100% of what it was before the African swine flu. So they are definitely getting ahead of any weather concerns, not only in their own country, but in the U.S. And getting these sales on the books. Now, the key is going to be, will they take those sales? And that'll be debated over time. But no question, this aggressive buying by China has been a real highlight for the market here in the short term.
Thank you. Alan, the stock indexes had quite a ride last week with sharp losses early in the week and a strong rebound on Thursday and Friday. What is the outlook for stock index futures?
Well, that is correct. The inflation numbers were a bit of a negative influence on stock index futures, and yet they were able to bounce. And I still believe that it's the low interest rates that, although they have come off the lows, still will dominate to take the indices higher. Also, we have seen a tendency for stock index futures to recover over the years, almost every time from one form or another of negative news. And I think that will probably be the case again this time. So the fundamentals are supportive, and I think there will be a rebound, and look for higher prices in the stock index futures. They're a bit lower today, still worried about inflation, but the earnings and other fundamentals still are supportive.
Finally, Alan, just one final question here. Give our viewers an update on the fundamentals of the precious metals markets, please.
Well, it's still the interest rates that are dominating to take the precious metals higher. In fact, we have the gold now trading at its highest level since February 11th. So central banks will probably be relatively slow to withdraw their accommodation. The charts are looking much more favorable. Downtrend lines have been taken out to the upside. So I think we're in store for more of the same. Higher prices are likely for both the gold and silver.
Thank you both. Remember, the views and opinions expressed today on this video are solely those of our guests and should not be construed as the views or opinions of ADM Investor Services or Archer Daniels Midland. If you'd like more information about our brokerage services, would like to speak to one of our experts about managing your risks, or would like to open a trading account, please visit www.admis.com.